Hey everyone, it's Alan Brochstein from 420 Investor and New Cannabis Ventures, and I'm here with your weekly update and a preview of our newsletter from New Cannabis Ventures that we publish each Sunday morning. I like to start this off with a little bit about what just happened in the last week, and I feel like this was being run over by a freight train. Remember, we had that Freaky Friday right after Thanksgiving. It's supposed to be a quiet day. And instead, the global markets were roiling, and we continued that this week. And it was a nasty week, ending a nasty month, beginning a new month. It's already nasty. And really, it's been a very disappointing year. And I guess that's a whole nother subject. I'm not going to get into it. But I will talk about kind of some when life gives you lemons, make lemonade at the end of this. But with that said, what I saw this week was continued relative strength in the largest MSOs. They continue to really hang in there, even though they made nominally a new low, taking out that early November low. They did hold, generally speaking, that level. Hard to say what's going to happen next week, next month, even next year. But this is a divergence where at least these stocks seem to be benefiting. I think one of the things helping has been these massive inflows in the MSOS ETF. We've talked about that previously, and that continues. That money's been deployed. Still a lot of cash in there, but it has been deployed. Something that I share with my subscribers at 420 Investor, Verano Holdings, has had more than its fair share of purchases from that ETF. Most of the largest MSOs are up like 25, 30% since the end of October in terms of the number of shares that the ETF holds, but it's more than doubled its position in Verano Holdings. So that was really this week. Just big meltdowns, continued sell-off in those ancillary names and in the Canadian LPs. I think what I've been talking about at 420 Investor, also I'll come back to this at the end, tax loss selling has been a topic of discussion. I think that's very real and it continues. I also this week was talking about window dressing, and it's the ancillary names in the Canadian LPs that really suffer the most from this. If you're not familiar with what window dressing is, it's basically when a fund doesn't want people to know what terrible stocks it owns, it sells them before the end of the quarter or especially the end of the year or mid-year. So here we are coming up to year end, and people don't want to show names like Canopy Growth or Grow Generation, just to pick on a few names. That these names are down a lot year to date. So with that, the newsletter this week, as I always say, we include in our content in general at New Cannabis Ventures, mainly curated press releases, and those tend to be about capital raises, financial reports, and M&A. That's generally what we run. And then we have some exclusive content as well. We've just gone through earnings season, so the content is pretty light right now. In fact, I don't know what we published, but in the newsletter, we're including just 3 stories that we considered important this week that were curated press releases. And they all had something to do with either capital raising or M&A. And so the first one is a capital raise, and it continues. One of the reasons I remain very confident in this industry is, unlike the past where we've had lack of access to capital, we continue to see very strong access to capital in terms of debt and in terms of sale leaseback. And so Bespoke Financial, which is a private company, raised $125 million from a bank line of credit that they will be deploying into the cannabis industry. I've been following this one peripherally for a while, seen a lot of their news. So it's good to see that a lender to the industry is able to tie up capital. Didn't give a lot of detail about exactly what that capital looked like, but the bigger story and why I included was that's a lot of money to be raised and deployed into ancillary and direct cannabis companies. That was the first one. The second one was a big announcement from Harbourside, and they had a capital raise embedded in that. And a few weeks ago, I talked about a capital raise from an organization called Polaris. And so Polaris has provided, I think, $77 million of capital to help this deal, but it's a pretty big deal. We all know the stress that California is under right now, And in this case, Harborside is merging with two other companies, and one's called Urban Leaf, and the other one is Loudpack. And I think they had an investment in Loudpack before. Urban Leaf is run by somebody that we'll be interviewing later this month. That he's an operator. He's been an operator in mainstream retail, and I've known Ed for a while. He's not that well, but I've met him at some of the Benzinga conferences, for example. And I think it's interesting because one of the problems for Harborside was their lack of CEO. And they had an interim CEO for like more than a year, and he left in June. And so this kind of solves that problem. But you have basically a Southern California retailer, Northern California retailer, wholesale operations there as well, plus Loudpack coming together. And remember, Harborside just merged with brand Sublime. So all in all, you have what will be a pretty big operator in California. So that's an important story. And then the only other one was another M&A and capital raising announcement, which was from Schwazze. And Schwazze, if you're not familiar with it, used to be Medicine Man Technologies, 100% Colorado focused until now. They've announced an acquisition of a New Mexico organization, and they also at the same time borrowed $95 million at 13%. They didn't name the lender. I was too tired yesterday to look to see if it was in the filing. I don't think it was. Maybe it was. But it gets to that point that I've been saying over and over. The capital is here right now. So there's a huge disconnect. Equity investors right now hate cannabis stocks, apparently. I think that's not really the truth. I just think that there's been disappointment. They're heading for the exits. I guess they do hate them, but it's just for now. But at the same time, debt lenders and sale-leaseback companies love them. So it's a very interesting time where the stockholders are saying one thing, but the credit side is saying something totally different. And so I hope that that continues to be the case, because when the cannabis industry has the kind of growth potential that it has, it needs capital, and that capital is there right now. So those are the three press releases we ran. This was a very abundant week for our own proprietary content. Our proprietary content tends to run around the interviews that we do with leaders from companies or investment companies. So that's one type. I also do kind of market updates. I'll have one for Illinois next week. It'll probably be published tomorrow, maybe Monday. It's written. But this week we analyzed the BDSA data. That was the first one. And that was good news. After 3 or 4 months of really very scary numbers. And we've been talking about this a year ago. There was a big boom in demand for cannabis. Some of it was sustainable. Some of it probably not so much. People had a lot of time and a lot of money and a lot of anxiety in the summer of 2020, and they ventured out into the real world. We've been talking about this for several months. Well, in October, most markets did better. An exception, which I talked a lot about at 420 Investor, was Florida. Florida actually had a terrible October. There's a very simple reason for it, and I'll just leave it at it was related to the Harvest acquisition by Trulieve. And I will also tell you that situation has been resolved if you look at the November data. So that was really it. Most of the states stabilized. October has one extra day. So if you adjust for that, we're not rip-roaring booming again. But these year-over-year declines in some states moved back into growth. It's not great growth yet, so it's nothing to get super excited about. But if you're paying attention to the trends, we stabilized, and that was really the point. The other piece of market research that I discussed this week, let's see, thought there were two. Maybe that was it. I'll come back to it if there was another one. We discussed the indices. There was just that one. I was thinking about Illinois, which I'll have tomorrow. So that was one. We also talked about our resources, and our resources are a revenue tracker as well as our indices. And so once a month, I give an update on our indices. So one of those was the American Cannabis Operators Index, which had a better month than most of the rest of the market, right? The market was hammered in November yet again. For the market, it was the ninth straight month down. And the American Cannabis Operators Index did fall, but at a lower pace. And so we discussed the winners and the losers in that article. The next one was the Ancillary Index, and that one was really beat up. And that's been a big theme recently with WM Technology, GrowGen, Hydrofarm, companies like this, really seeing their stock prices decimated. That showed up in the index during October. That was the second one. The third one was the Canadian cannabis stocks, and they didn't drop as much as the rest of the market. The whole index was down just 5.5%. The reason for this was the tier 3 names. There were a couple of names that rallied a lot. And not because of that, but it's a good segue. In that piece, we detailed some changes that we've made to the Canadian index. We make these changes periodically. Our goal is to have an index that really reflects the market. And so the change was pretty simple. If you don't do $2.5 million of revenue in a quarter, you're out. And so the industry's matured to the point, if you're not doing $2.5 million, that's not a big number. That's 10 million a year Canadian, 8 million US, 7.8 million. So because of that change, 13 names exited. So there'll be 25 names across the 3 tiers, and that's detailed. You'll have to go to the site to find out which one is in which now, but we discussed the new thresholds for each of the tiers. And the result was 5 names in tier 1, I believe 8 in tier 2, and 12 in tier 3. So that was the third index update. And then the final one's the Global Cannabis Stock Index. And there we talked about some of the stocks that actually went up during the month. And not surprisingly, a couple of those were MSOs, for example. So you can refer to those if you look to be educated on what's going on in the market. The other type of content we run is, the revenue tracker was another one. That's another one of our resources. And there I kind of shared an observation that earnings season was tough on the cannabis sector. The Canadian LPs, and those, there weren't that many that reported this quarter, but bad, right? Canopy growth, bad. And the ancillary names, we saw a lot of damage there. And then the MSOs, for the most part, the largest MSOs did all right. There were a few exceptions. Verano's revenue was a little light, but they made it up on the adjusted EBITDA side. Curaleaf had a pretty rough quarter compared to its peers. The other 3 were all pretty much in line, which was better than people feared. But some of the smaller MSOs, they didn't fare as well. And so it was kind of interesting. So that revenue tracker, we also shared a few names that are reporting in December. There aren't that many, but we provided a preview for a couple of those. And then the other type of content that we run are our interviews. And we had 2 interviews this week. The first one was with Green Lane, and Nick Kovacevic is now CEO there after the merger with Kushko. He's the CEO. And this is the first time we've talked to Nick since the merger closed, which is almost 3 months ago. And he provided an update and really talked about how he intends to build value there. And then the other one was with the new CEO at Organogram, Bea Goldenberg. And we had interviewed her when she was at Supreme. She wasn't there very long, right? They got acquired by Canopy. And so that was an interesting interview as well. And again, if you don't have time to listen to the entire interviews, the audio, which for both of them was close to 30 minutes, we do have a written summary. So that gets me to my final point. I talked about lemons and lemonade, and you were probably waiting for this. I remembered. This year, as I said, has been very tough. It's been the mirror pretty much of 2020, a year where we started off in the tank and we ended up driving at about 80, 90 miles an hour. This year, we continued into the year driving hard and fast, and we hit a brick wall, and it's been all downhill since then, as you know. And so consequently, I wanted, and many of you probably already appreciate this, but tax loss selling. You may have heard of the concept. You may not be familiar with it. This year, it's very important. And I didn't get into this in the piece itself about how I had started talking about this at 420 Investor at the end of September, because I really felt like it's more important than ever this year. And why is that? Well, unfortunately, while our market's down a lot from where most people bought stocks this year, which was in January and February, the rest of the stock market's up. So for people in general that are looking to reduce their tax liability, our sector is an obvious candidate. So I feared, and I guess it's playing out, that we're seeing some tax loss selling in the fourth quarter. And many people don't understand why you need to do this actually, but we gave an example, and in our example, let's say that you bought some stock late in 2020 and you sold it in 2021, but you took those proceeds and bought something else. And instead of selling it along the way, you've just held it. And so you're sitting there with a big paper loss against a realized gain. Well, you're going to have to pay big taxes. So the point of this article was to encourage you to overcome the obstacles of selling a stock at a loss. And we shared a strategy of how you can do that and not miss out on a potential rally. And so we just shared a few ideas, not really super complex, but I got to tell you, my experience with my subscribers at 420 Investor tells me that this is the type of thing retail investors definitely want to hear. Now, some of you professional investors out there, this may have been overly simple this week. We'll get back on track next week. So with that, I want to wish everybody a good week ahead. Take care.